Our housing market has been on what feels like a crazy roller coaster ride for the past few years. Will 2025 get any better, or will this bumpy ride continue? Many experts feel like we could be in for more of a bumpy ride. So let's take a look at what we could experience in 2025. We'll also talk about how our inventory is doing, and I'll share my opinion and what I'm seeing. So let's dive into this. First up, let's take a look at what's happening nationwide and what the experts are saying. And for many, they look to those types of predictions when it comes to interest rates and which direction they're headed. Now, what's really confusing for many is that they hear that the Fed cut the federal funds rate, and yet they don't see the mortgage rate changing. In fact, often after the Fed cuts the rate, the mortgage interest rate goes higher. And this is because the mortgage rate is not directly affected by the federal funds rate. So although many of the headlines are going to read, Fed cuts the rate, this does not mean the mortgage rate. It usually helps with personal lines of credit, credit card debt, and car loans, but not with mortgage rates. And even with the number of times that the Fed has cut the Fed's funds rate and the bouncy interest rates, people are still having a hard time buying a home. And some of this has to do with inventory, and some has to do with interest rates. So let's take a look at what some of the experts are saying when it comes to the interest rates and what they think the real estate market's going to look like in 2025. Here's what Zillow says about rates for 2025. Zillow forecasts 2.6% home value growth in 2025, a relatively slow pace that is similar to this year's growth. For existing home sales, Zillow forecasts 4.3 million in the coming year, up slightly from 4.1 million in 2023, and a projected 4 million in 2024. Now, I have to tell you that the overall number of homes that were sold in 2024 is actually higher than what was sold in 2023. And currently, we have 10% more homes under contract at this time this year than we did at the same time last year. While affordability challenges will remain, buyers should expect more homes on the market, meaning more time to consider their options and more leverage in negotiations. Signs point to mortgage rates easing in 2025, but as we saw in 2024, mortgage rates rarely follow the expected path. What is more certain is that buyers should expect plenty of ups and downs throughout the year. And here's what the National Association of Realtors is saying. According to Freddie Mac, the average 30-year fixed-rate mortgage has ranged from 6.08% to 7.44% over the past 52 weeks. But hopeful buyers who may be waiting for lower mortgage rates likely won't see that anytime soon. Mortgage rates will not decline in tandem with the Fed's rate cuts, he said, blaming the bloated budget deficit as the reason. With a large budget deficit, there's less mortgage money available. The government is borrowing so much of its money. A large budget deficit will prevent mortgage rates from going down to 4% as they did during President Trump's first term. Here's what Freddie Mac said. While the U.S. economy continues to surprise on the upside, we expect a moderation in economic growth in 2025. This is due to a further cooling of the labor market and a potential decrease in consumer spending. Under our baseline scenario, we expect inflation to continue to move towards the Federal Reserve's target rate of 2%. As a result, we expect the Federal Reserve to implement further rate cuts in the upcoming meetings. Now, this was released prior to the most recent Fed meeting, where they have already said that in 2025, they expect to only be cutting the Fed rate 2 times. They go on to say this. Mortgage rates rebounded rapidly from the 2-year lows in October and are back up over 6.7%. In the near term, rates may continue to be volatile and higher rates will keep home sales muted for the remainder of this year. But as we get into 2025, we anticipate that rates will gradually decline throughout the year. The expected decline in mortgage rates in 2025 should loosen some of the rate lock-in effect for existing homeowners, offering more inventory in the market. The rate lock-in effect in October increased again as mortgage rates increased, up from $38,000 in September to $42,000 as of October of 2024. Lower rates and a boost in the inventory should lead to slightly higher home sales in 2025. We expect house prices to continue to grow, although at a slower pace. Now, like I said, what we do know is that the Fed's plan for 2025 is to only lower it twice. And with that, the overall consensus is that rates will stay higher longer. But here is the unfortunate reality. No one really knows what's going to happen with interest rates. Here is a chart that will show you all the different predictions by all the different companies. And from Mark Palum, Senior Vice President and Chief Economist of Fannie Mae, he said this: from an affordability perspective, we think 2025 will look a lot like 2024, with mortgage rates above 6%, home price growth easing from the recent highs, but still staying positive, and supply remaining below pre-pandemic levels. Still, heightened mortgage rate volatility may present opportunities for would-be homebuyers to take advantage of temporary lows, and we may see stretches where housing activity is boosted by lower rates, but on average, we expect mortgage rates to remain elevated and a hindrance to activity. Now, I don't disagree with that at all, and I do still see sellers feeling that locked-in effect and just staying put when they'd really like to move. I have a few sellers that are ready to go. They'd like to either downsize or buy something bigger. They've outgrown their house. But if they downsize, they look at it and say, well, I can downsize, but my mortgage payment is going to be the same, maybe even higher. And if they need a larger house, then looking at a larger house with a higher interest rate and a larger overall home price, just for some, doesn't make sense. Now, what I have talked with some buyers about is that if they can buy right now and not stretch themselves too far, it is not a bad time to buy because you don't have the same amount of competition in the market. Because as the rates start to fluctuate in 2025, so is the demand, which means that as the rates go down, you are going to have more competition to buy that one home that you love. But even with these interest rates being higher, those homes that are in excellent condition, in a great location, and have been updated, these homes are still selling fast. And sometimes still with competing offers. The last 2 homes that my buyers bought, we were in this exact situation. We had been waiting for the perfect home to come on the market for them to buy. And when both of these homes did, they were coming soon. So they weren't even active in MLS. I got them in day 1 to see the house. And I looked at them and I said, if you love it, we have got to act fast. Both buyers ended up getting those homes right before another offer came in. So although we didn't have to compete against another offer, it was really close to having to compete. And then there's the ability to refinance when rates do come down. But the benefit you have of buying now is that you're not competing against all those other people who jumped into the market when the rates did come down. And when the rates are a little higher and there's less competition in the market, meaning there's less demand, sellers are usually a lot more apt to negotiate. Now, when it comes to our inventory, nationally, we are still seeing our inventory levels low. However, in the Phoenix market, our inventory has increased, and we currently sit at about 21,000 homes on the market. Now, this is up considerably from the 4,000 to 5,000 homes that we had on the market during the craziest time I think our market has ever seen, but it is a far cry from the 58,000 homes that we had on the market when the market crashed. So overall, our inventory is healthy, which is great for buyers, but here's the problem I'm seeing. Many of the homes that are currently on the market need to be updated, or there are maintenance issues that need to be addressed. And as we get into our season, which is about 2 weeks into January, we are going to see an influx of more inventory hit the market, which means for sellers, your home needs to stand out above all the rest. Because at that point, buyers are going to have a lot more to choose from. But buyers, here is another little kind of tip. If homes have been on the market through November, December, and then into January, by about the second week of January, we are going to see a big increase in price reductions. So those homes that didn't sell in the previous year, we see a big spike in price reductions, and there could be an opportunity there. So as we go into 2025, here's what I see happening for the Phoenix market. We are still gonna have people moving here, or they're gonna be moving within the city. I do think we're gonna continue to have a bumpy ride in 2025. I wish I could tell you something different and that it was gonna be a change, but I don't think we're gonna see that. I think the only way we do see that is if there's some major change. We're gonna have a lot of job loss, or some of the things that the administration has planned make a big difference in the overall housing market. So I go back to what I always say. Now is not the right time for everyone to buy. But if it is a good time for you to buy and you can buy comfortably, then now is not a bad time to buy. You will see less competition from other buyers, and you have some negotiating leverage, which we haven't seen in a few years. Now, if you are thinking about buying, make sure you take a look at this video where you see all the homes that you need to avoid. As always, I thank you for watching, and I'll see you next time.